You want the best asset allocation, don't you? But how are you going to figure that out? There's so much information out there on asset allocation and what you should have, but you're going to have to figure that out for yourself. Stay to the end of this video because I have a cool little free tool that you can use to kind of, nudge yourself in that direction of, hey, this might be the right asset allocation for you. And I'll just let the cat right out of the bag right here. The little free tool that I'm talking about is a Vanguard questionnaire. So Vanguard has this little questionnaire, this little tool that you can use in order to kind of estimate and kind of say, hey, maybe this might be the right asset allocation for you. But with their free little tool, there are a few assumptions, and that means there are a few little bit of limitations. So this tool only assumes that you can either be using stocks, bonds, or short-term reserves, something like cash or cash equivalents. It does not cover alternative investments. It does not cover real estate, doesn't cover commodities or precious metals or anything like that. So when they're recommending their asset allocation by using this tool, it's only going to talk about stocks, bonds, and pretty much cash. And I think the best way for you to use this tool is to actually see me put it in action for you. So I'm going to try to fill out this tool really quick because it's actually pretty small and pretty simple to do. And I'm going to try to do it as in I'm doing a hypothetical scenario of someone that's on the path to financial independence. So this is I'm coming at it from a mindset of this is someone who wants to retire early. This is probably the answers that they would choose. And it might be right for you. It might not even fit your situation at all. So obviously you're going to have to do it for yourself, but let's go ahead and check it out. Alright, so the first thing we need to do right on here, we can go ahead and start the quiz. We have to accept their terms and conditions without reading them like we do with everything else. And then we have question 1 here. Alright, as I withdraw money from my investments, I plan to spend it over a period of, we're going to go with more than 15 years because we're on the path to financial independence. So we are super long-term investors. Then we have question 2. When making a long-term investment, I plan to keep the money invested for more than 8 years, as long as they let us, because we are super long-term investors. Okay, next up we have question 3. When it comes to investing in stock or bond mutual funds or ETFs or individual stocks or bonds, I would describe myself as, so we're going to go ahead and actually put experienced here. Because if you watch the On Cash Flow channel, you're probably pretty experienced in investing, or at least you're well on your way. Okay, question number 4. I plan to begin taking money from my investments in, we're going to go ahead and put more than 15 years. Because this is probably going to give us more equities. I can already tell by the question that it's probably going to give us more equities, but we're just going to put more than 15 years. Let's say you're early on the path to financial independence. Question 5. My current and future income sources, for example, salary, social security, pensions are, so we're going to go ahead and just put stable. So you have a pretty good job, it's not crazy, you're not going to get fired yesterday. All right, question number 6. Through that time, bonds lost 4%. If I own that bond and I lost 4%, what would I do, basically is what it's saying. I would not sell it off, because why would you sell it at a loss? If that's your asset allocation and it didn't do it too much out of whack, then you would just hold on to the investment and sell nothing. All right, question number 7. So this chart shows the greatest 1-year gain and losses of $10,000. Which one would we choose? So we have the least volatile and the most volatile. But us, if we're going for the super long term, we're going for the most volatile. During market declines, I tend to sell portions of my riskier assets and invest money in the safer assets. No, we do not do that. That is probably a bad idea because that means you're trying to time the market. So we strongly disagree with this statement. Next up, number 9, I would invest in a mutual fund or ETF based solely on a brief conversation with a friend, coworker, or relative. That's going to be a strongly disagree. You should not change your assets, your investments that often, especially not at the water cooler. Question number 10. Okay, from those dates, stocks lost over 31%. If I own something that lost 31%, I would, if I had a stable job and I was on the path to financial independence and stocks lost 31%, I would buy more of that investment because they are on sale. All right, number 11, we're almost done here. Generally, I prefer investment with little or no ups and downs, and I'm willing to accept the lower returns these investments may make. We strongly disagree with that, because if you're on the path to financial independence, you're going to have to get some pretty good gains in the long term. And so you're going to have to see some ups and downs. So you strongly disagree with that. Okay, and then it asks us for our current asset allocation. I'm not going to put anything in here. I don't want to influence the decision of what they give us in the results, based on what we already have. So by default, it just gives you 100% short-term reserves. It assumes that you don't have any money invested and just have cash. So let's see what it recommends. So based on that, it recommends that we are 100% stocks. So it recommends that we be pretty darn volatile, pretty aggressive. And what's funny about this is that going through that pretty much actually really does kind of fit my situation, except now I'm actually kind of in financial independence, and so I'm not putting as much money in investments because I don't have nearly as much income. But still, that's kind of my mindset, and I am actually 100% stocks right now, and I was 100% stocks on the path to financial independence as well. So I think that this tool is pretty darn accurate. It got my situation down pretty well, and if you answer all of those questions, then it might give you a pretty good suggested asset allocation. All you really need to do in order to find this tool on yourself is just to do a simple web search, Vanguard questionnaire. It should come up. As you see on the screen when I first started, it's called the Vanguard questionnaire, so it should be pretty easy to find right there for you. And my overall thoughts on this tool is I actually think it's a pretty good place to start. It seemed like it was pretty accurate when it was assessing, my situation. Someone on the path to financial independence that's pretty aggressive, that's pretty young, that has, plenty of years in order to invest and just wants to invest for the long term. I think it was pretty accurate. But ultimately, it has to come down to experience. You actually have to get into the market. You actually have to be invested to find out what your ideal asset allocation is. Because me, with 100% equities, I know that the market can drop 30, 40, 50%. I know that that can happen. It kind of did happen in March of 2020, but I'm still here. I didn't sell off, so that's a good thing. I have tested my risk tolerance. And that's really the only, and actually the best way that you are going to have to find your risk tolerance, that you're going to have to find your asset allocation that's going to be ideal for you. You're going to actually have to get into the market and test it for yourself. But this is definitely a good place to start. Let me know in the comments below, what is your current asset allocation? I'm really curious to know. Please let me know what your current asset allocation is and why do you have it at that? Right now, I'm about 100% equity, so you know my secrets. And then after you comment on there, make sure if you haven't already, you watch this other video that I created, my full guide to investing your way to financial independence. Check out that video if you haven't already. Thank you so much for watching this video. I'm Zach from OnCashflow.com, and I hope to see you next time.